Just raised $1 billion for a fund focused on the future of finance, some crypto, in a market that's cooled on crypto. So tell me, what are you and your LPs seeing that maybe others aren't?
Yeah, well, so first of all, the world looks really different 4 years later than when we raised our first fund. And it even looks very different from a year ago. And I think what we're doing with this new $1 billion is we're planning to back founders building what we're calling is the new economy. The future of finance. And certainly digital assets are a part of that. And I see really, Emily, 3 structural shifts going on, and this is what we're following. So the first structural shift is new financial infrastructure, the plumbing, if you will, for the new innovation economy. And that's 24/7, and it's global. And then the second structural shift is new assets, things like stablecoins that were just beginning stablecoins. Now we're seeing tokenization of securities, of stocks and bonds and other instruments. And of course, that leads to new markets. We can talk about things like prediction markets or perpetual futures markets. And then the third structural shift that we're paying a lot of attention to is what I'll call the agentic finance piece of it. And this is quite simply, what does a world look like when you're building financial services and products for an end user that's not a user, it's not a human, but it's a computer or an agent. So that's where we're planning to put this new $1 billion to work. But of course, you know, there's a lot of uncertainty in markets, not just in digital asset markets, but in all markets. And so like we did with the first fund, and I think this served us well, we're paying a lot of attention to pacing, to the volatility, and to the cycles.
You've talked about how, you know, AI agents need their own financial rails, but can you actually explain this to me? You know, if an AI is booking my travel or registering my kid for camp, why can't it just use a credit card?
Yeah,
or Stripe?
Well, one of it is, and Stripe's a great example because if you look at what Stripe's doing, they're also integrating these products and services. And the Carlson brothers have talked a lot about agentic finance. And one of the examples is if you have an agent that is doing things on behalf of a human, they're going to be able to need to subscribe to services, subscriptions, software, things like this. And right now, the model we have is built for humans doing search, right? That's the ad model. But that's all going to change when you think about agents doing things. And agents will need to transact with each other. And to your question about why can't they just use, did you say a credit card? Because that's what most people ask. It's all about instant settlement. It's about finality. It's about global and chargebacks. You know, we think that they're not going to be using the financial rails of the past, but rather the financial rails of the future.
So I always love talking about your history and sort of how you got here, given that you were a federal agent who prosecuted people who were stealing Bitcoin during the Silk Road investigation. What was the moment you realized that that technology that you were investigating was something that you wanted to back?
Yeah.
And how did your DOJ colleagues feel about that?
Yeah, sure. Well, actually, let me take you back because that was at the tail end of my prosecutorial career. I spent over a decade with the feds, and I started my career actually on the Supreme Court in Washington, D.C., and I was doing national security. And then when I moved to DOJ, I was doing national security cases. I was doing kind of cartels, violent crime, organized crime. And then I spent time in D.C. at DOJ headquarters where I was learning how the agency process worked and how the different branches of government interact together, right? How legislation gets passed. And then I moved out to San Francisco in 2009, still with the Justice Department, and I was doing murders, I was doing hostage-taking, cartel cases. You mentioned crypto cases, money laundering, you name it, I prosecuted it. And I think in many ways I was really, and that was for a decade, and now I've been almost a decade in venture capital and in technology. And one of the things is I started my career in venture capital as the consummate outsider, consummate outsider. And what I realized was that some of the experience and training I had was really deeply relevant to technology. You mentioned crypto. One of the things I realized early on is this is a really powerful technology in terms of like digital breadcrumbs. And this is something we're talking about with AI, you know, the provenance of things, traceability of things, privacy, identity. All of these technologies are really important tools, and they can be used by bad actors and they can be used by good actors, and the technology itself is neutral. And I think it's really important, by the way, that the bad uses of those technologies are prosecuted and are investigated. And in some ways, I realized early on, and you mentioned the case involving some of the corrupt agents investigating the Silk Road, we never would have been able to solve that case had they been using traditional methods of finance, bank wires, for example. It was that permanent distributed ledger that was immutable that allowed us to solve that case. And I realized that's a really powerful tool. And so, again, fast forward, here we are 10 years later, and the technology has expanded rapidly. But I think that background and learning the walk the halls knowledge, not just in places like DC, but also just the different branches of government and globally, the art of persuasion, like these are important things that we bring to our founders now at Haun Ventures.
For years, crypto promised to reinvent payments, and no one really used it to buy anything. Suddenly now, stablecoins are having a moment. Did we finally find the killer app for this? Is it just moving money around?
Well, moving money around is, of course, trillions of dollars of opportunity. And so I think that's one piece of it. People use the word crypto, but it actually stands for cryptography. And I've been talking about stablecoins since 2017. And they were just getting started in kind of 2017 and 2018. And you're right that now they've found product market fit. I mean, we had one of our portfolio companies acquired by Visa this year. They acquired BVNK for almost $2 billion in cash. Another of our early stage bets, Bridge, was acquired by Stripe for $1 billion, just over $1 billion. And I think what you're seeing is large traditional financial institutions like MasterCard. We've seen Visa make moves, announcing yesterday in the stablecoin space. You're seeing that this is really mainstream. And the consumer for stablecoins is not necessarily in the United States. Consumer use of stablecoins is mostly in high inflation economies. However, the users of stablecoins here in the United States are businesses and enterprises because they like, especially ones that do business globally. It's frictionless. It didn't used to be, but it is now. And that's just part and parcel of how technology changes.
You spent many years trying to convince regulators in Washington on this new technology. Now there's been a vibe shift in Washington towards crypto. What do you make of that? And is there anything that you're worried about getting wrong now that crypto is suddenly welcome?
Well, sure. We always have to be worried about getting things wrong. With any new technology, I mean, I don't think digital assets or the future of finance is an exception. I think we've been talking about that with AI today. You've been talking with a lot of folks about that, with bio, with plenty of other things. Look, I think that folks are really focused in this moment in DC on, okay, well, now there's a Republican in the White House, and there's Republicans control Senate and the House, and yet what this brings me back to is bipartisan still always matters, because of course the name of the game for the digital assets industry right now is getting this Clarity Act passed, and even with the Republicans controlling the House, Senate, and the White House, they need the Democrats to pass the Clarity Act. And this is something we've been telling our founders, and we've always done as a fund, is you have to work with both sides, absolutely, and you have to future-proof your technology. We're not trying to proof it for 4 years. We're trying to do it for the long haul over decades. So I think that's very important. That's a really important lesson that we've always been aware of, and I think, again, I've been aware of having spent a lot of time in Washington, D.C. Things change really quickly.
The Trump family's crypto ventures have made them over $1 billion, raised concerns about conflict of interest, the Trump meme coins, Melania coins, World Liberty. Even some crypto supporters think this is not a good look. What do you think? Do you think this is net negative or net positive for the industry?
Look, I think there's like the legal answer of whether it's allowed or not, right? But I think more what I come back to is the optics and the atmospherics of it, and anything that calls into questions optics and atmospherics, I'm generally not a fan of, Emily. And I think I'm not a fan of that. I prosecuted plenty of corruption cases in my time when I was with the federal government, but I would say it's not unique to the crypto industry at all, and it's not unique to one side or the other. I think in general, I support things that are conflicts of interest as a general matter, and that's why I'm a big supporter, and I have publicly supported, for example, the bipartisan legislation that Representative Brian Stiles proposed to ban insider trading in Congress. Like, it's legal, but is it a good look atmospherically or optically? I don't think so. So I'd say the same thing. I'd say the same thing in the answer to your question.
What about the Iranian government using crypto to evade sanctions?
Yeah. Again, what I come back to is all kinds of technologies are going to be used for good and for bad. What I would say that's unique with digital assets, and I want to talk about the intersection of digital assets and finance, but what I'll lastly say on digital assets is one of the things I realized is it's unprecedented to be able to seize assets real-time globally. You can't do that with bank wires. People think you can. People think, oh, I'll just send a seizure order to a bank. Well, people who think that are sorely mistaken. I spent 10 years trying to do that with massive money laundering cases, and I can tell you that it's rarely successful. Where the money has moved overseas several hops to different banks, you have to go through MLAT treaties, you have to go through legal process, and that's with our allies. Now, enter the digital world, and the fact that the governments around the world can instantly seize and detect, I think that's very powerful.
So let's talk about the intersection of digital assets and finance and enter AI.
Yeah.
Like, where is all this going?
Yeah. I think two categories that we're looking at the intersection of. One category, I talked a little bit about this at the outset, is agentic commerce and the need to be able to transact. And you're talking about agents, agents don't have bankers' hours. They don't stop working on the weekend. They don't observe wire cutoffs. And they're also going to be able to need to do things like micropayments globally, instantly. Think about querying an LLM. Think about the kinds of things that they're going to be able to need to do. And we're talking about agents. We're not even talking about sub-agents. So that's one area and one category where there's a really big intersection. And then the second area where there is a large intersection between what we've been doing for the last 4 years and where we see the world going, I have 4 words for you. And it's privacy, it's identity, it's reputation, and it's provenance. And what do I mean by provenance? I mean, where did something come from? It's the who, the what, the when. This, in an age of AI, it's already important today in the digital world, but in an age of AI, provenance, we think, is going to become even more important. And it turns out that some of the blockchain-based technologies and distributed systems have been looking at this. This is the technology story, not the market story of digital assets. Blockchains are actually pretty good distributed immutable systems for proving provenance, for proving when something came into existence. This is really important in an age of AI. So too, I think, is privacy really important in an age of AI. And folks in the cryptography field have been working on technologies like zero-knowledge proofs. And it used to just be people in the digital asset space that were talking about zero-knowledge proofs or fully homomorphic encryption. And now we're hearing AI folks talk about those concepts. So I think there's a lot of synergies that people don't really realize at the intersection of these two very frontier technologies.
Your personal portfolio is really interesting. You're a personal investor in Anthropic, OpenAI, Anduril, SpaceX, Cerebras, Grok, Physical Intelligence, Cognition. Sort of like a who's who of frontier technology. When you're writing your own checks, what's the through line? And, how does that sort of impact your strategy in your fund? I
think it's pretty simple. If it's something in what I'm calling the new economy or the future of finance or digital assets, immediately goes to the fund. And if it's something else, and I'll give you a couple of examples in the bio space. 2 investments I have in the bio space. One is Neko. That's Daniel Ek, the founder of Spotify's new company. And folks here haven't necessarily, maybe some, I'd be curious to show of hands, how many folks have heard of Neko? Okay, so some hands going up, but they're coming to New York. People in London,
It's mostly in the UK, right?
It's mostly in the UK. There's long waiting lists for it, and I think this is so fascinating. It's longevity. It's like a full body scan. It's under $500. It's in an hour, and it harnesses AI and other technologies to help people do preventative medicine. This is a really powerful thing. They're opening in New York, by the way, later this year. They're hoping to come to San Francisco after that and some other cities in the US. This is clearly not something in the mandate of the future of finance or the digital asset space. So although I'm sure plenty of our LPs would love exposure to that, that's not the mandate of our fund. But I'm not going to bury my head in the sand. I have access to these incredible founders, and because of my background and my ability to really be a bridge between worlds, Emily, of institutions and governments and also technology, and having fluency in both of those languages, I've been really fortunate to be able to have investment opportunities personally in some of those. The other company on the bio side is a company called Edison, and they're condensing the timeline. I don't know, they're based here in San Francisco, and they're doing drug discovery and really discovering medicines instead of in years, months or years, in matter of hours with AI agents. And of course, it's very early days and it's very experimental, but I think that's really interesting. Again, that's a bio bet that's not something that's going to go in our fund. So in terms of just the dividing line, think of it as kind of future of finance, the plumbing of the new economy, digital assets. That's through the fund.
Being someone who's been able to move between these two worlds, Silicon Valley and Washington, it often seems like there are, so many ways these two groups of people or places can misunderstand each other. Having fought, regulatory battles with crypto, from both sides, what's your advice to AI founders today?
Yeah, again, coming back to the importance to working with both sides. I think a lot of founders mistakenly focus on the here and now. And, the here and now changes. Just like the technology changes, so too do who's looking at these technologies. And also, my other advice to founders is they focus on one branch of government, invariably. And in this country, we have 3 branches of government, and I think we're lucky we do. We've got Article 3, the courts. It's a really important branch. No one's focused on it. And I always tell founders, if stuff ends up in court, you're going to wish you were, what do courts have to look at right now as precedent for AI? Nothing, because it doesn't exist. So what are they going to look at? They're going to look at scholarly articles, law review journals. Most founders have never heard of that. It's really important. We have Article 1, we have Article 2, but they often ignore some of the branches of government. And then 2, I say these are global technologies, and it's not all in the U.S. I hear so many founders across different frontier technologies say, well, this is, Washington, or maybe they'll say, or Brussels. Well, guess what? Governments all around the world take very different approaches. And so I think it's really important not to just focus on what's happening today in Washington, D.C. Let's also not forget in the U.S., you've got really active state governments all over. So as you're thinking about the regulatory or legal or policy strategy, it's important not to myopically focus.